Mainz and Money London 2017, ladies and gentlemen, and with me here is now a uranium company. It's Denison Mainz, and David Cates, the CEO, wants to talk with me about uranium and of course about his company. David, welcome.
Thank you, thank you. Always happy to talk about uranium.
Yes, absolutely. I'm happy to talk with you because you are, in the market, you're an expert on the market. So let's, before we dive into your lovely company, maybe one comment onto this uranium price. I mean, last week like $19 something, then 26, today again 21 something. Are they nuts?
Well, it's very volatile, that's for sure. Some of this stuff doesn't make sense. I think we understand why the price went up. We saw Cameco announce a big curtailment, temporary shutdown of McArthur River, which is one of the largest uranium mines in the world. And it's a relatively low-cost operation, so I can see why there'd be upward pressure on price. What doesn't make sense is a sell-off after that. We saw sort of a similar pattern with the Kazakh announcement earlier in 2017, but it didn't happen this rapidly. So I think there's maybe a few guys guessing around, trying to play the market and get in, make some money, sell, take some pressure off. It'll really be what happens next, I think, is what we have to pay attention to.
So what's next?
It'll find a floor.
Yeah,
I mean,
exactly.
we were trading at $20, right? So for it to go below that after this kind of cut would make zero sense. Something weird would be going on in that case. So now let's see what happens in the next few weeks and see if we get back to maybe a more rational response.
What would be for you more rational?
Well, I think there should be an upward pressure on the price with this curtailment. I mean, that's up to 18 million pounds a year coming out of the market for 2018 for sure, and who knows beyond. I mean, I'm not sure that this is a temporary shutdown. I think this is a wait and see what happens in 2019 and 2020 kind of shutdown from Cameco. So I think it would make sense that the price will go up. I don't think it would make sense that the price goes down. That's for sure.
But from where does all this physical material come in the market? Because it looks like somebody's selling all the time into the market.
Well, that's the $100,000 question, if you will. I mean, it's hard to say. There is definitely a trader element to what goes on in the market, where you do have guys buying the material quickly and then trying to resell it to a utility who's really a consumer that needs to buy and saying, well, look, I was faster than you, now you're going to have to pay me more for it. I think some of that is going on, so you see the same material coming in and out of the market. I think that's definitely part of this cycle.
Okay, great. So thanks for the market statement, but now let's talk about your lovely company. I think it's approximately a year ago. No, we spoke at PDAC, I think in Toronto last time. So that's approximately 9 months ago. So what are the latest developments over the summer?
Oh my goodness, it's been the busiest and most successful summer that we've had in the company's history while I've been involved. We just finished a summer drilling program at our flagship Wheeler River, 64 drill holes, 30,000 meters. 91% of those holes had significant uranium mineralization.
Wow.
Now, why is this so important? This is the last drill program before we put out a resource estimate for Wheeler River. Now, we focused at one of the two deposits, the Gryphon deposit, over the last 2 years. So 2 years of drilling since our last resource estimate towards the end of 2015. This is our last program. The assays have just come in. We've just released the assay results. So now it's just a question of crunching those numbers, updating the resource. I mean, we couldn't have had a better summer, just delineating things exactly the way we thought we'd see them, but also expanding mineralization in areas that we had no estimates for. And all of that happened in the same summer that on another project, our Waterbury project, we found a whole new area of high-grade basement-hosted mineralization called the Husky Zone. 9.2% over 3.7 meters, our highlight hole there. Couldn't have asked for a better summer, but the uranium market so troubled that investors almost ignored the results.
Crazy. So can you give us a bit more about the results, maybe about the, let's say, percentages uranium you found, what widths, what intercepts, stuff like that?
Oh my goodness, at Wheeler it would take us an hour.
Okay, but maybe just an idea.
Well, the best way to look at Wheeler, right, is that our drilling has been at the Gryphon deposit. So when we estimated the resources 2 years ago, end of 2015, Gryphon deposit was based on the A, B, and C series of lenses. Right? So we delineated those to get them from an inferred to an indicated. Now what we've been doing is expanding beyond that. We focused a lot in the summer on finishing that delineation and expansion. we've expanded to 2 new series of lenses. So the D series of lenses and the E series of lenses. So these are all occurring totally outside of what we had estimated for the A, B, and the C lenses 2 years ago. Now we were at 43 million pounds, around 2.3%. 2 years ago.
Nice, yeah.
So we've got 2 years of drilling, almost 150 holes that we've put in. Now we're looking to be at an indicated level and even larger on the whole thing because we've got those whole new horizons of the D and the E lenses.
Super, perfect. So that sounds like a big announcement then for next year.
Well, maybe the end of this year.
Oh, do you want to do a nice Christmas present?
Yeah, maybe a Christmas gift, and because we've got the pre-feasibility on schedule for 2018.
Okay.
So the sooner we get that resource estimate out,
then you can
the sooner we can start the pre-feasibility engineering work, and that's middle of 2018.
And you have the money already in place?
We ended the third quarter with 46.5 million Canadian on the balance sheet.
Yeah.
We're in good shape. You bet.
Fantastic, great. So for next year, then the big target is the PEA, right?
The pre-feasibility,
pre-feasibility,
for
yes.
Wheeler River, that's right.
Wow, and how long will it take, the whole year, or
we're looking
even longer?
At the first half of the year.
Yeah.
We've been working on the pre-feasibility for about a year already, doing environmental work, some engineering trade-off studies, looking at a couple of different mining methods for the Phoenix deposit. Really interesting stuff. And Phoenix is the highest grade undeveloped uranium deposit on the Earth that we know of. It's 70 million pounds, average grade of over 19%.
Wow.
And yet, it's got lower margins in our model than the Gryphon deposit. Part of it's because it's so high grade. It's costly to mine something that's so high grade. But we spent the last year working on, is there a better way to mine it? What we modeled was very conservative. It's being used at Cigar Lake. It's a precedent technology. But maybe there's a better way. So we've spent this time working on that, kind of in the background. And our hope is that we get to the pre-feasibility and we can pass the technical hurdles to maybe have a different mining method by the middle of next year.
Oh, that's interesting. Perfect. So let's say the long-term game plan is really to go in production, right?
Yeah, I think we have to be cognizant of the market.
Yeah.
But I think the reality is that we're the nearest term in the Athabasca to developing. We're already the largest undeveloped project in the Eastern Basin, which has all the infrastructure there.
Yeah.
We already own 22.5% of the McLean Mill. So we really do think we're in the pole position for developing a uranium asset. And I think we're prepared to do that.
Yeah.
The fact is, this market has been tough.
Yeah.
So we've got to start the clock, get the permitting underway, and then respond to the market in terms of when we go and pull the trigger on a development decision or financing for the mine.
Yeah.
You can't do it, you can't operate in isolation of the market.
That's not working. No. And also I think we both see the market that the demand is growing, and the supply is shrinking.
It is.
So that's a big gap, right?
There will be a big gap, and these projects take time.
Yeah.
I mean, we're talking 2025 for first
exactly.
production.
I just would say 5 to 10 years.
Yeah, and you have to be investing now to be there then.
Exactly.
And you have to believe in that long-term picture, and you're right. People are consuming more energy. There's no, where does the energy come from? Nuclear is a really important part of the energy mix. Base load, low cost, reliable. I think there's a good future for nuclear energy. That means there's going to be demand for uranium. And because the price has been so low for so long, there's very few projects that are actually moving forward.
Absolutely. Great. Super. David, thank you very much for the update. Keep fingers crossed, and we look forward to the Christmas gift you want to show us, hopefully.
My pleasure as always.
Looks like, or sounds like a very compelling story, and I think you're doing the right things here, and you have enough money in the bank. I love that.
Excellent.
Thank you very much,
so much,
David. Yeah, ladies and gentlemen, that was David KCC, CEO of Denison Mines, and you heard it, $4 to $6 million in the bank, and probably before Christmas there's the new resource estimate here, then also with indicated category, which is the really important trigger point when you want to go in production, and also for next year they want to do the pre-feasibility study. So I think they are doing the right stuff here, getting prepared for the next run in uranium. So check out the company. Thanks for watching us. Bye bye from London.